House prices in Australia have just reached record all-time highs. We've seen continuing strong demand for houses even after 13 rate hikes, taking the average mortgage rate to around 6 or 7%. So on the surface, everything looks okay, with official economic data still showing growth. However, if you look under the surface, we're starting to see some major issues. And as these issues start to take full effect, we may just be reaching a tipping point that could see the housing market and the wider economy start to really break down. I'm Biko Konstantinos, and that's what we're going to talk about today. If you're interested in the housing market, which is every bloody Australian over the age of 18, why don't you subscribe to my channel? I'll keep you up to date with my independent analysis and commentary. And if you enjoy this video, make sure you give it a like and leave us a comment. I adore seeing you beautiful people engaging with my videos. And if you're not beautiful, then you must be stunning. Now let's consider if the recent house price strength is coming to an end. Australia seems to be a tale of two cities, or two groups of people. First, we've got those who are still riding high from the COVID policy bonanza, which saw their assets go through the roof. Those in this group tend to own multiple properties and have reduced amounts of debt. So those who bought property years ago when it was ultra cheap have been able to pay it all off, or most of it, and now they've been able to ride the wave of the housing boom, which has seen their property values go up 30 to 50% in just a few years. They're not affected much by the high interest rates because they don't have much debt, and many are actually doing even better because they're actually earning more interest on their sizable bank account balances. So we've got a group here that are counting their lucky stars because COVID policies have made them more money than winning the lotto. But then we've got this other group, and this group is either renting or they have a large mortgage. So they've been hit ultra hard by surging rents and surging mortgage rates, and that combined with the huge surge in cost of living expenses has basically sent them to struggle street. Just listen to some of these posts to see how bad it currently is for some people.
The cost of living in Australia is ridiculous.
We're single parents trying to run a household on one income.
It's tiring. It is tiring having to struggle to live in this country.
And you're bumping up rents $100 a week at a time, at least. It's getting to a point where you're going to start seeing suicides left, right and centre. I'm close.
It's great for big business. It's great for all you big bloody kahunas, all your CEOs, all your friends. But you know what? Us people down in the lower echelon, we're just struggling.
So while many property owners are on easy street, we've got a large section of the community who are struggling just to survive. Nearly all of their income is going to paying expenses, and with the current rental crisis, there's a real risk of many people being made homeless. But because those who won the lotto are still able to spend up big, the economy still looks quite strong, and inflation keeps rising, and the RBA may have to raise interest rates further. But what does this all mean for house prices going forward? Well, there's been some recent data come out that's extremely worrying and could end up putting massive downward pressure on house prices. Firstly, Australia has some of the worst real disposable income trends in the developed world. The 10-year trend is low, the 5-year trend is minuscule, and the 3-year trend is totally negative. Now, the definition of real disposable income refers to the amount of money an individual or a household has to spend or save after accounting for taxes and adjusting for inflation. It's a key measure of the purchasing power and economic well-being of individuals or households. And in Australia's case, it's not looking healthy at all. Just check out this view of Australian real wages, which has been adjusted using headline inflation figures. So you can see after COVID, when inflation surged, but wages growth remained low, the purchasing power of wages dropped significantly because the prices of everything was rising way faster than your wages. For example, in the last 2 years, the average price of groceries might have risen 30%, 8%, but on average wages might have only risen 6 to 8%, meaning that the purchasing power of your income has gone down in real terms. And if you look at this chart, the value of Australian wages are basically back to 2010 levels. In other words, all the rises in your wages since 2010 has had its value basically all erased. How about that for a kick in the nutsack? The second issue for the Australian housing market is that house prices, or the price of land, has gotten so ridiculously expensive, it's distorting the entire Australian economy. And then when you add in the crazy amount of debt that's now owed for property, it creates a very worrying picture. It means that the overall housing market is more susceptible to a crash. Now let's have a listen to Alan Kohler from the ABC.
Now, the value of land owned by Australian households as a percentage of GDP is now the same as it was in Japan at the peak of its great property bubble in 1990. Over the following 15 years, Japanese land halved as a share of GDP.
So the overall value of Australian land has gone into the stratosphere, and that land value as a percentage of GDP is also astronomical. So GDP is the total value of all the final goods and services produced in the country. So the total land value compared to overall GDP is now at the same ridiculous level than it was in Japan when they were in the middle of their housing bubble. Now, Japanese house prices got smashed after their bubble burst, and prices were severely depressed for over a decade. Now, we're not saying that that will happen in Australia, but it's a great example that shows that house prices don't always go up, and in fact, severe, long-lasting crashes can occur.
But the result now is that Australia's debt service ratio, that is repayments as a percentage of income, are way above the rest of the world.
Now, this is critical. Australia has some of the largest amounts of debt towards property, which means the servicing costs for that debt when interest rates rise becomes much more severe than, say, other countries who have less average debt. So we've really seen this kick in lately, with interest rates surging and many mortgage holders facing major financial stress. But see, in Australia, everyone just expects interest rates to start falling again and go back to ultra low levels. But the question, or the very big risk, is that interest rates will actually stay higher for a longer period. Now, when most people are employed, like they are now, they'll basically do everything they can to meet their mortgage repayments. They'll get a second job, they'll severely reduce their spending if they have to, they might even post photos of their feet on OnlyFans. But what happens if unemployment starts to really rise? In that case, households with large mortgages would absolutely not be able to make their repayments, and this could lead to distressed selling, which could eventually lead to a crash in house prices. So there's some major underlying issues for the Australian housing market and the wider economy, but there's also still ridiculous demand for housing, because basically housing is the only asset that you can highly leverage and make consistent tax effective gains year after year. So because of that, everyone wants a house. Renters want a house because renting at the moment's a bloody nightmare. Investors want a house because they want to keep cashing in on the Australian Ponzi scheme. And immigrants want a house because they got to live somewhere, and nobody wants to rent in Australia if you don't have to. And Australia's currently bringing in way more immigrants than we could ever build enough houses for. So this is making the current housing crisis so much worse, but it also just adds to the overall demand for housing, which is why Australian house prices are now back to record levels. And who would have thought that after 13 interest rate rises? This just proves that the Australian housing market is a total basket case and has basically now been turned into a speculative play toy for the rich. So we've got massive underlying issues, but still ridiculous speculative demand. But will the issues start to outweigh the demand and start pushing house prices lower, or even potentially crash? I'm Biko Konstantinos.